Alright. I think this is officially video 10. 10 videos of the series. Pretty crazy. 10 videos in a week. I've been, actually, less than a week. Like 5 days. I've been trying to pump these out like crazy. But if you haven't seen by the title of the video, Equilibrium, which is essentially how to find price when it's at discount. And obviously how it can help you, because you want to get priced at a discount to get the top dollar and get the most profit that you can. And honestly, guys, I'm low-key like autistic at like, I have hella brain farts, but that kind of just shows if I can do it, then you can definitely do it. Like, I've been rewatching these videos and I'm like, bro, like I'm dead ass like slow. But shit, y'all are loyal, y'all love me, I love y'all. You know, you gotta accept me how I come. All right, let's get back on script here. So, have you ever noticed how price goes into an area, a certain area, like a certain level, and then after that has a little reaction, maybe a retest, and then decides where it actually wants to go? Just like order block, it's tied in with support and resistance. It's tied in with all of that, because like one of the big steps in entering a trade is you want to be you want to buy in at the discount price, or you want to sell at the discount price, like kind of like a Fibonacci. It shows you when price retraces and you can get that discount, and that certain level is called equilibrium. And once you understand it, you'll stop chasing for trades and you're going to catch them. You're going to stop trying to chase the move, and you're going to catch the move, because you're going to be able to tell when it enters equilibrium and that discounted price. And when it's at that discounted price, that's where you're going to see people are going to want to enter the trades. People are going to want to enter buys and sells because price is at a discount. So equilibrium is one of the most important concepts in trading for me, because you got to use it for every single trade. But most people either ignore it or completely just don't understand it or misunderstand it. So I'm going to break that down for you guys in the simplest way and show you how you can implement that in your trades. So what is equilibrium? Equilibrium is simply the 50% level of range. High plus low. Think of it as a fair value between buyers and sellers. Above equilibrium, price is trading at a premium price. Below equilibrium, price is trading at a discounted price. So I'm going to show you guys my Ganbox settings, which these are my Ganbox settings for it to look at equilibrium. Take a screenshot, whatever. These are really all the ones that you need here. So I'm going to, before we keep getting into it, I'm going to just show you how I would use equilibrium. So let's say you're looking for, we can just use this as an example. You're looking for longs. You're going to place it at right here. So you're going to see, actually we can do this here. If you're looking for longs, you want it to be in this bottom half. That's where price is at a discount if you're looking for longs. If price is down here, it's a good time to buy. You pair it up with the fib, and you can see it if you place it on the previous leg down, the previous low into the most recent high, you can see it lines up pretty good with the 0.5 and the 0.6. And as you guys know, that's a big confluence for me. So you see price is at a discount here. And usually when price is at a very, very good discount, that's when I like to size up and risk more. Because obviously if it's already down here, your stop loss is also going to be down here. So you're risking a little bit. So you want to go heavy on these trades. And you could have, let's say you waited for it to close down here, so it would have been this candle. Could have placed your and maybe this isn't the best example, because obviously you can see it came very low. Price came very low here. But you get the idea of how to use the Gann box. Now I'm gonna show you how I would have used it on a short. Would have got my Gann box from, let's see, that's not really a good move. Could have been here. From the low to the high, you would, if you wanted to go shorts, you would have bought up here, somewhere in this discounted price up here, and you see how it played out. This is a better example because price didn't really push up past it like this one did. You see this candle here. But yeah, this essentially just shows you when price is at a discount and you can get a cleaner entry for more profit. So how you just saw me draw the equilibrium, identify a clear range, swing high, swing low, use your Fibonacci tool, draw from low to high for bullish move or high to low for your bearish move, and then the 0.5 level equilibrium, which I'm showing you here, the 0.5. The midpoint is where price often reacts or gets pulled back into. So you can see here price was kind of juggling in this price range here. So this is where it starts to click with equilibrium. In an uptrend, price tends to pull back into discount below equilibrium before moving higher. In a downtrend, price pulls back into equilibrium above before dropping. So instead of chasing price, you wait for it. That's what I was saying earlier. Don't chase the trade, let it come to you. So instead of chasing the price, let it fall into your equilibrium, let it fall into your Fibonacci before you can enter the trade. So how to use equilibrium in trades? An example. Here's how I use it in my trades. Identify the trend, the bias, like I was saying last video. Higher time frames, you can identify the bias for the day much more clear. Mark out your range. Wait for price to retrace into equilibrium beyond equilibrium, below equilibrium if you're looking for a short or long. Look for the confirmation, which would be the liquidity sweep, which in this example would have been taking out these highs here. You see, price goes into a discount, you could have shorted. And then look for the confirmation, order block, fair value gap, which this wasn't that much of an order block. You can see it taps into a fair value gap here. And there's another little order block here. So it could have been any of these two levels you could have used as your take profit. And this is where you're going to start to get more entries and better risk to rewards. Obviously, the less risk, the more size you can put on the trade and the bigger your profits will be. But obviously, that's not what we're chasing. We're not chasing for big profits. We're just chasing for knowledge and we're chasing for wins. The money comes after you start to learn all these confluences and start to pair them together. So now we're going to get to some mistakes you can avoid with equilibrium. Drawing random ranges that just don't make sense. And you can, honestly, you'll probably gaslight yourself into being like, this is a good equilibrium. This is a good time to buy. This is a good time to sell. Before you enter the trade, double think, triple look, take a fourth guess. You can never go wrong, but you don't want to hesitate either. You know what I'm saying? Just make sure your head's clear. Make sure you're actually reading the market and not fooling yourself just because you want to enter a trade. Ignoring the overall trend also. Don't ignore the trend. You can be really stuck on like, I really want shorts. But if you're not going to get the shorts, don't force the shorts. And don't use this tool in consolidation. You want to use this tool when price breaks out, like I was saying, liquidity sweep, order block, fair value gap. You don't want to use this trade in ranging consolidation because it's not going to work. Equilibrium is a guide, not a blind entry signal. You know what I'm saying? Like I've been saying over and over and over again. When all these indicators pair up and they line up together, that's a good way to take a trade. And how equilibrium can connect everything. Oh shit, sorry. How it can connect everything is liquidity gets taken, price moves aggressively like it fills an order block, then it retraces towards the equilibrium, then continues the move. That's the cycle you want to trade. I'm going to say it one more time. Liquidity gets taken. You see price move aggressively, retraces down toward equilibrium again, then it continues the move. Equilibrium is a pretty good tool for continuation trades also, just like Fibonacci. You see the leg up, then the higher low come back into equilibrium, the higher low comes back into the Fibonacci, and then you can take the continuation there. And honestly, I think that was pretty good. Pretty good explanation of order block. And if there's anything else, if this made sense, support your boy. Drop a like, subscribe, join the free trading Discord. If you actually take this stuff serious and you want to see a difference in your trading, maybe if you haven't even started trading, you don't want to start off by filling up your brain full of shit. You know what I'm saying? You want to get to the point you want to learn what the things mean and have a good understanding for them. That's why I'm making this dummy guide, this series, so you actually understand the ins and the outs of every indicator and how to use them. Because once you start to understand that, you can start being creative with it and start to use your own building blocks. So I'm breaking down equilibrium in this video, and I think that's it. Honestly, thank y'all for watching. I think that's it for the 2 videos of the day. I'm probably going to do a poll later in the Discord, see what videos you guys want to see next. And that's it. Deuces.